Hey, I want to welcome you guys back to another episode of the AWM NFL podcast. I'm your host, Riccardo Stewart, and I'm joined with my coworkers and my friends. We got Jeff Locke, Zach Miller, and Sam Acho, combined over 20 years of NFL experience and now in the financial world. And so we've been talking at least the last couple episodes of building multi-generational wealth. And just a reminder, what we mean by that is not that you have 30 million or more, but you're transferring that to your kids and then to your grandkids. So that third generation is what we're talking about, and multi-generational wealth. And what we said is to be able to create, sustain, and build that, you got to have 5 skill sets. Last episode, we talked about human capital. What does it mean to invest in yourself and get the most out of who you are? We're going to talk about the cash flow game. Like you can spend, you can share. What does that look like? We're going to talk about investing, or what does it look like to put your money to work? And then athlete CEO, like how do you put around the right team? But the fifth one that we're going to talk about today is that of taxes. And that's something that everybody, whether you're an NFL player or not, you got to deal with. But what does it look like to be an ultra wealthy NFL player as it relates to taxes? And so I'm going to start first, and I'm going to start with Jeff Locke. I usually start with Jeff because it's kind of like the running game. It's like we got to get things going. We got to be good on first down. Try to get 5 yards, give ourselves reasonable second down, stay on schedule. And Jeff definitely makes sure that we stay on schedule.
Rick, it's pretty funny though. You're going to the punter to get the running game going, but I'll take it.
Yeah. Well, I'm a defensive minded guy, so the punter is usually on our side. We like good field position. So let me start with you. Okay, so Jeff, when people talk about multiple streams of income, like in my mind, I first think about W-2, 1099. And the interest, dividends, and so forth. And essentially, what does that mean to an NFL player as it relates to his taxes?
Yeah, it's a great question. So you nailed the main 3 buckets, right? We got W-2, we got 1099. 1099 is also called endorsement income, if you want to just lump it all together. And then you got dividend and interest income. That's just investments, right? So it's what comes from the team, right? It's what comes from endorsements, and it's what comes from investments, right? The 3 buckets. But they get taxed differently. Right, you're going to end up owing tax on all of them, but let's start with W-2 first. Say you're on the Chiefs this year, right? Chiefs, they're going to pay you your W-2 salary either every week or every 2 weeks, right? Depending on what team you're on. Zooming out a little bit. Every time they pay you, they're going to take a little bit of tax out of your pay stub based on where you played that last game, right? So that's called withholding. Withholding just means they're taking tax out for you and paying a little bit to the IRS and paying a little bit to the state. That's all withholding means. You don't got to do anything until you finalize your taxes in a couple months. So that's W-2. You can go in and change things. That's where we come in and do our jobs on changing how much you should be withholding from your pay stub. 1099, this is the fun one. This is endorsement income, right? I had no endorsement income. I was a punter. Zach and Sam definitely had some endorsement income back in the day. This is stuff, maybe your agency's helping you get a deal. Maybe you have a marketing person. You're getting a deal to go and speak or to show up at a car dealership, or maybe it's just from Nike, right? And the key with endorsement income is you do not get anything withheld, right? So they pay you $100,000 for your contract. You're getting the entire $100,000, but you still owe the tax man later, right? So you got to make sure you're working with your CPA to figure out how much you're going to owe on that. And then last bucket, dividend and interest income. You've been playing a while, you've been saving a while, and you've been investing a while. You're going to have dividends and interest coming off of your investments, and they are just like endorsement income, where you don't get withholding at all on these things, right? You're getting paid all of that dividend and interest income into your account. This is the tough one too, because you don't see it. It's just going back into your investment account, and you're not even noticing it in your account, and you're going to owe the tax man at the end of the year on that also. So 3 different streams, right? 2 different ways they're getting taxed, and you got to make sure you're tracking the 2 that are not getting withheld, because those are the ones that will come up and bite you if you're not thinking about them.
That's good. That's really good. Sam, I've been seeing you on ESPN a lot more lately. I see the way you are tracking things, the way you analyze things. And one of the things that I've noticed by you on ESPN is you like to chart a college player's progress. You will take a player in his sophomore, junior, senior year and go, okay, let's go back, look at where he was as a freshman, and let's look at this maturation process of their skill level, right? And you can see that they've actually progressed in their game. What are some of the rookie mistakes you see NFL players taking in the tax game? And then the part B of that is, what are ways in which they can progress?
So the number one rookie mistake that I see from NFL players is the fact that they're not giving well. And what do I mean by that? I don't mean that they're not giving. I mean, they're not giving well. I made the same mistake. Okay, I made a lot of money. I want to go and support my family or friends or maybe nonprofit or start a charity, all these things. So I would just write a check and send it to the charity or write a check or give cash or whatever. I was giving, thinking I'm doing this awesome job and this great thing. And look at me, I'm doing what I want to do. I'm giving back to my people, my community, but I wasn't giving well. That's the biggest mistake. Well, what's the one solution to give well? It's using a donor advised fund. Why does that matter? People keep on talking. I remember when I first heard about a donor advised fund, I wanted rookie up for year 5 or year 6, maybe even, probably year 7. Heard about what's a donor advised fund? Well, all that it is, it's a way to give well. You heard Jeff just talked about the different ways that people get taxed. And one of them is on that investment income. So when you invest money and you make money in that investment income, if you want to take it out, you're going to get taxed on it, right? Even at the end of the year, you'll get taxed most likely 23.8%. And so if I actually said, okay, you know what? I want to give more. I could take some of that instead of saying, hey, look how much I made. I could actually say, I want to give some of that money that I made in that investment income. I want to give it away, right? People talk about donating appreciated. Appreciate means to grow, appreciated stock. And so I could actually end up giving potentially 23.8% more than I would have because that's money I'm not getting taxed on. That's one way to give well. And so the rookie mistake that I made, that a lot of people who I see are making, is they're giving, they're doing what they want to do. Man, I made it to the league, I'm giving, but they're not giving well. And starting a donor advice fund is one easy way that you don't have to think about to give well. I heard about it, I didn't know what it was, and now I'm like, dude, I'm so glad that I'm giving well.
Man, so I heard Jeff, the professor, talking about the 3 different main streams of income and how you're taxed at those different levels, and to be like, aware of what's happening and where there's not withholding. I hear you saying, hey, you are doing a great job blessing your community, your family, your friends, and so forth, but you're not doing the best. Okay. Speaking back to the NFL analogy, right? Jeff, you talked about it earlier. I'm a defensive guy. One of the things I've seen this past weekend in football, whether it be in college or in the NFL now, is what happens is the quarterback takes the ball, he puts it in the mesh, he go ahead with the running back, he pulls it out, he throws a great RPO pass on a glance route, and then there's a penalty because the lineman is down the field. And it's not, if everyone's like, what is the lineman doing? Well, it's hard because the lineman is thinking it could be a run and the ball's not out yet. So I'm gonna go block this guy. And it's not that he's just wrong to be wrong. It's just in the context of that play, they're not on the same page. And therefore there's a penalty. I think the same thing happens in taxes, where you can have your finances and you can have your taxes, and there's kind of an RPO. And what happens is, before you know it, because they're not on the same page, there's a disconnect and it's a penalty. And so I'm going to go with you, Zach, because I know personally that has happened to you, and I'm just going to let you tell your story.
Yeah, so it's an expensive lesson for myself. So $35 million contract, one of the highest paid tight ends, and I left $2 million on the table in taxes I shouldn't have ended up paying. So I overpaid in taxes by $2 million as a player from, my 8-year NFL career. And so wait, how does that happen? That's a lot of money, right? So look at, as an NFL player, there's nothing you can do about being in the highest tax bracket. Every single NFL player, you're in the highest tax bracket. Okay, so that's a good problem to have, but what can you do about it? So in my case, what I should have done is, you have all that money coming in, so you actually don't want cash flow. You don't want any more income coming in that you can help, right? So you want to, as much as you can, when this comes to investment income, those qualified dividends Jeff talked about, that interest, all that stuff, you want to defer as much as you can to when you're done playing. So we just call it turn off that spigot. Like, you got the hose on, turn it off until you're done playing, and then you can crank that bad boy back on and let that cash flow start flowing once you're done playing. So if I would have done that, I wouldn't have had any high yield corporate bonds. That's a red flag. If you have any of those high yield bonds in your taxable account, man, you're not doing it the right way. You got to fire your guy and actually have an integrated approach where your CPA and your investment guy are on the same page. Anything else? A lot of REIT income, so real estate investment trusts, cash flowing real estate. Also, that's going to be something that's going to be costing you money. Those things were prime examples. And then if you don't have an individual 401k, you're not maxing out Roth IRA, possibly a backdoor, super mega backdoor Roth, just these super advanced wealthy strategies. Every player, NFL player, should be taken advantage of. If I would have done it, 2 million more I would have in my accounts, and kind of money left on the table by paying too much in taxes.
Zach, how often should your investment guy and your tax guy, if they're separate, be talking? Like, it seems like your guys weren't talking that well and dropped the ball on a lot of stuff.
Yep. So I had that Wall Street guy at Merrill Lynch over here, had a athlete-based CPA at his own firm, and they'll claim to collaborate, they'll claim to talk, but really one guy's just trying to get tax returns done, the other guy's trying to just get you the highest gross return or return before taxes, when what we want to care about is return after taxes. So my guys, as much as they said they would coordinate, they're not in the same building, they're not at the same company, they don't have your best interest at heart. They actually are just trying to do their jobs, which is fine, but it ends up costing money to me. It's costing money to NFL players. I see it constantly, day in and day out, when we bring guys on and they've left a lot of money on the table, just like I did.
It's interesting because I was talking to a player the other day and was talking about who came to football later and did other sports. And I said, what was the biggest jump? And he says, realizing after being someone who just watched football for years and now playing it for years at an extremely high level, is how complex the game of football is. It looks different from the outside and when you get in. The tax game is the same way. And if you're an NFL player and you just go, well, I know I got to pay taxes. Well, you do, but do you have to pay as much as you're paying? Are there other ways? And we've just laid out a few of warnings and opportunities. If you have any questions, you want to know more about how to develop the skill in taxes, we'd love for you to reach out to us. You can reach us at 602-989-5022.